So, and that's, nothing is, notice this hit 80 at the peak. This is another sign that hitting 80 is a peak. And the Dow is over that 80 right now. And so, but we also see, this is like 7 here, and the bottom is maybe 3. So this indicates a long-term bullish pattern. And that means the Swiss franc will one day go back to 140 and go higher. So, the government will eventually lose control. So look for to determine, as I said, bullish, bearish, look at the relation between the high and low here. And whether it's done, look for this. And the current trend, there's no trend in this, by the way. The black line is below these 2 colored lines. That means trendless. But, Swiss franc is a good thing to own for the long term. Now the Japanese yen, Japan's insane. One day it's going to just totally collapse. Notice, here's the crisis. The yen went up in the credit crisis, along with the dollar. And this makes no sense. Well, the Swiss franc went down. I mean, this is totally crazy. And then it continued to go up till 2011 when it started to go down. Now note that this is a different pattern. This is I call it the commodity peak, the peak in 2011. But this went up in the credit crisis. All the other, real commodity peaks went down in the credit crisis and then peaked in 2011.
When was the tsunami? Did that coincide with the peak?
Fukushima Daiichi was 2011.
Oh, okay.
March 2011.
Oh, okay.
And this happened, the peak was a tinge later. And that's what collapsed uranium and a whole bunch of other things. So, yes, that's a good point. But this can affect Japan, it didn't affect other countries. But you also see here, is in the sell-off, this went to 60, it should only go to 40. So the sell-off was really, really huge in the end. Right. Way overdone. So it needs to go, it may have a several-year rally to actually make up for that sell-off. And it should have like a 5-year rally. Where it could easily go back to 130 or whatever. And we'll see this with, now the Australian dollar moves with gold. We've said this a million times. Here's the bottom in 2009. It would have been a great purchase. It went down. Gold also went down in late 2008 too. It lost 30% of its value, which also makes no sense. You see this 2011 peak along with gold right there. Then it started declining with gold. Oil did the same thing, by the way. You see this selling, this went to over 40, so that's done. The blue line is moved above the red line, which means it's trying to get bullish. This wants to go up. And you see this is moving higher, 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 and moved above 50. This is trying to break above 0. So the Australian dollar is trying to become bullish. So is gold. We'll see the gold chart in a minute. So you see this is a commodity pattern. This low in 2009, early 2009, and then the peak in 2011. And there's variations of it. So all of these assets are moving together. Some of them are currencies, some of them are commodities, some of them are stock markets. You can put them all in one basket. Now, if you want to diversify your portfolio, you shouldn't buy everything in that basket. If you want to maximize your returns and your risk, you put everything in that basket. So this is a portfolio. This deals with portfolio choices too. Now here's oil. I write a lot on. I haven't read anything lately, but I write a lot on oil. It's like one of my expertises. So you see this peak in 2014. We don't have a long enough chart for oil because we only have like about 5 years here. So this screws everything up because we're doing the current commodity. Now, what we see is, and wait for, remember this when we go see gold. This got to 60, but it's on a sell signal. And this got to, maybe 5. These are extreme values, extremely negative values, way overdone. And when you go too far on one side, the pendulum has to swing all the way over on the other side to make up for it. So this went way too far on the selling side. And there's various and sundry reasons where we could do an entire lecture just on why this happened. But so that tells you, say in the next 5 years, you're gonna have a big rally in oil. And 5 years from now, it's gonna go back to that 90 or way above that 90 price. And currently, it's actually in this range, it's range trading. And it needs to hit that 60, and when it breaks above that 60, and I think that will happen next year at some point, maybe in the first half of the year, then it will be entering a new bullish phase.
Yep.
That will be the significant breakdown. Notice this hit 50, could not get above, it's trying to get above 50 again. That's also considered, it would be bullish. And this needs to move up above 0, so it still needs more work. This is not fully done yet. It needs another 6 months, a year. So, but the selling strength, which would too extreme, is loosening. It's losing its power. You want that blue line to move up above the red line. Now, this could take a whole year, but this is what I see will be happening. And then oil is going to be very expensive in a few years from now. Now, natural gas has a similar. This goes back to 2008. That was the peak. There was a peak in 2008 in commodities and in stocks. Now, this never had a bottom. The bottom is here in 2016. That's when oil bottomed in January or early February. So notice this also this went below 20. So it's not just oversold, it's way oversold. Now this went to 60 also. This is also some horrendously low value right now. So natural gas is going to have some big rally also. And it won't necessarily, it doesn't actually follow oil directly. It lives its own life.